Salams. Okay, we're gonna start just now, guys. Salams. I'm just gonna send the link to everyone. Okay, we're gonna start just now, guys. Okay, we're gonna start at about. I hope you're feeling much better now. Yeah, I'm feeling a bit better. Feeling a bit better. We'll start at about 5 past. How many people so far in the group? I mean, sorry, in the live. We'll start at about 5 past. Okay, it's about 48 people. I think. Okay, I think that's good enough, guys. For the 8 of you, please like the live before we begin. Before we begin the live, please like. Please like and make sure if you're not subscribed, subscribe, guys. It's not that difficult, right? Uh, this was CPI, by the way. Hi, Smile, Scripting. I can't lie, CPI, I got, I didn't get cooked. I made some money, but, oh, it was a bit rough, I can't lie, because, you see, I got put off by, when the market started dumping like this market dumped from about 100 pips from year to year, but 100 pips it dumped. It basically put me off, right? What I initially said was that market was gonna first spike there, and then we're gonna take a sell down till the gear or something like kind of till this fair value gap here. That's where I said we're gonna spike up to, right? But market had other ideas, right? It decided, of course, let's dump a bit more instead. And then if I wasn't thinking properly, right, it was a bit of a rush day. Otherwise, I've taken this buy up and then close everything and taken my sells there, but it wasn't to be. But yeah, at least we made something from CPI. But and then we did take this buy. It was a very choppy buy as well. And then yeah, but I closed somewhere around here or something. Somewhere there I closed. But I initially I said I'm gonna take till this 1 hour gap. But anyways, let's delete all of this. We start fresh today, right? Let's delete. Right. Okay, so today we are going over what we went over last week, right? How to use the 1 hour fair value gap, the 4 hour fair value gap, basically to give you direction in the markets, right? And today we're going to be looking at, last week we looked at Nasdaq, today we're going to look at gold, right? Now for gold, I prefer to use, I would say more so the 4 hour fair value gap than the 1 hour fair value gap. But the 1 hour fair value gap can still be used, right? Alright, so I'm gonna show. We're gonna start off. Right, let's go. Let's go. Feedback. Let's go back. Let's go back in time. Let's go to. Let's go to the beginning of the week. Right, Monday. I'm gonna bring this thing down. Okay. So this is now Monday, right? You guys should know what fair value gaps are by now, right? If you don't know what fair value gaps are, please you gotta go watch the previous live streams to understand what the fair value gap. But I'll go over simply what the fair value gap is. I don't want to waste too much time on this because I've been over and over. I've been going over this like almost every week, right? So basically, a fair value gap is it's a 3 candle formation like this, right? It's a 3 candle formation, and basically, when the market moves too quickly in one direction, it will leave a gap. Okay, and you can see we have a 3 candles right here. Market moved very quickly in one direction and it left what we call a fair value gap. So this gap that between this candle and this candle, you'll see that the wicks, right? The wicks will move like something like that. It'll be something like this. Okay, so the wicks are something like that. And you'll see there won't be any wicks here, right? If there was a wick like this, forming like this, something like this here, let's say like that, right? Then you can't say this is a fair value gap. This will be incorrect. This wouldn't be a fair value gap. Okay, this is not a fair value gap because we have there isn't a gap. Okay, but if the wick forms like that and it does leave a gap, like right, then of course this will be now considered a fair value gap. Okay, it's very simple. Okay, and obviously this is a bullish example. The opposite of it would be if the market obviously was bearish, would be something like this. I don't need to draw this, but you guys should know what I'm talking about, right? Bearish example, basically just flipped. Okay, right. So it's very simple. Okay, it's very simple concept, and I use fair value gaps in a lot of my trades are based on fair value gaps, right? But let's just delete all of this for now, and we're gonna start off, right? So I'm gonna show you guys exactly how we're gonna find entries using the fair value gap. Okay. So first thing first, what you wanna do is you wanna mark out all your 4 hour fair value gaps, right? Okay, mark it out in your chart like that. Okay, you can mark out that one. Oh, I understand. Okay, perfect. No, perfect. Okay, mark out your unfilled gaps, right? I mark out all my unfilled gaps like this, and I look at possible buy and sell entries. Question: how do I know which is the correct fair value gap? Okay, okay. So basically, you'll see basically 3 candles, 1, 2, and 3. Okay, a fair value gap. Okay, so a fair value gap should have, of course, there should be a gap, clear gap between the 3 candles here. If there is no gap, let's say for example, if this candle formed something like this, okay, there isn't a gap here, so that can't be a fair value gap. Okay, so that's not a fair value gap right there. Alright, so it's very easy to know what's a fair value gap and what isn't a fair value gap. Right, perfect. Okay, so now I'm gonna look for something, for some sort of reaction. So I got this fair value gap that I drew out right here, 4 hour fair value gap. All I'm waiting for is some sort of reaction of this gap right here. So I will go onto my lower time frame. Okay, I can even go back onto my 15-minute time frame, and I'll mark up my 15-minute time frame fair value gaps, right? Also, so possible places where we might reject from, right? So you can say you can mark out this as well. Okay. Oh wait, this is Monday. I forgot about that. Okay, never mind. Don't worry about this. Okay, it's kind of messed up because that was the weekend gap that formed, right? Just carry on forward. Okay, okay, let's just go to Tuesday because this thing is gonna be messed up now. Let's go to Tuesday, sorry. Right, so we got this 4 hour gap right here. Right, okay, perfect example would actually be here, wait. Right, just gonna mark out. Okay, so you see, right, basically what happened was, yeah, we had the opening gap. This Monday was a bit messed up because of that gap there, so we're not going to really look at that. But we look at Tuesday, right? Well, this is at 10 o'clock, okay, right? So you see now we tapped into the fair value gap, okay? I'm on the 50-minute time frame. All I'm going to look for is a breakout below this fair value gap, right? So if we close something like this, okay, now, okay, wait, let's go one bar back, right? I go one bar back and I go on to maybe like a 1 minute time frame. Right, a 1 minute time frame favor I'm on my 1 minute time frame or even the 5 minute time frame. All I'm waiting for is, of course, I'm gonna wait for a fair value gap to form. And I see there is a fair value gap here. Right, so I just mark this with a different color. Okay, so we're gonna go. Okay, that just didn't respect it at all. But entry that I might take is, of course, maybe here. Okay, I won't take the entry from there. Where I'll take an entry from is here, maybe. If we close below this gap here, I will look for sells. I'll look to take a sell here, right? Okay, then we close below there. They take a sell here. Stop loss, maybe I'll go maybe just above these highs right here, maybe here. TP I can target, maybe this all the way down here. This 4 hour gap, right? See, when I say we can use the 4 hour and the high time frames as more as direction, right? The high time frame can basically tell us, you can use it as TPs, using a stop loss where you want to close your trade, where potentially market could reverse from. So just let this play out. Okay, it's a bit choppy, this trade. Okay, this trade went all the way choppy, right? Okay, this one didn't. This trade here went about how many pips in profit there? About this went into about 170 pips profit there. Didn't really go all the way down here. If you did decide to hold, they would got stopped out there. But if you held till here, 170 pips here. I'm just gonna go on to my like 1 hour time frame or something. Let me just see something here. Okay, so let's just see. It's nothing here. Okay, so did we reverse right at this fair value gap here? Right, so you see also how we rejected off this fair value gap would have been giving you indication that we might be reversing from here. Look how strong this fair value gap was, because all the time that we tapped into it, we bought up, right? We rejected from it. So that could have been an indication for you to close the trade there. So if you go on your 1 minute time frame, right, you see how we rejected all the way here. So that probably would have given you indication that we're gonna be this fair value gap isn't gonna break very easily, right? So this is just one example, right? All we waited for, okay, we waited for market to tap into the 4 hour gap, right? Then we wait for some sort of breakout, right? We got the breakout, yeah, but we're not going to enter straight away. We enter once the market basically gives us an IFVG or even a fair value gap, right? Which, if we look at maybe a fair value gap would be something like this, and the market would probably just respect it like that, and then we drop down lower. Okay, so such a smart guy, bro. Chill. I'm not that smart. Okay. Right. So yeah, what happened was we entered off this inverse fair value gap, right? We waited for market to inverse this gap, close below here. Very important that you wait for candle closure. And a lot of people they don't wait for candle closure. They wait for they just see the market just push down here. They think, okay, the market's gonna continue to push down, whatever. Sometimes the market does do you dirty and just continue to dump, absolutely dump down. But a lot of times it will just sometimes it'll tap, it'll basically just reject off this fair value gap and continue going up higher, right? So just be careful. So you gotta wait for candle closure. You wait for candle closure there. Your entry is just about there. Okay, then of course your TP and stop loss, you place it, right? Okay. So let's just look at another example, right? Let's just delete all of this here for now also. Let's look at previous week. Let's go to to a random date or something. Okay, okay, let's go there. Right, so first things first, I want to mark out all my 4-hour gaps. Okay, 4-hour gaps right here, I can see that's an inverse gap. I'm just gonna mark out my unfold. Okay, we see how we reacted off this 4-hour gap, right? Okay, actually, I'm gonna go and see how this, show you guys how this trade played out. Here's another gap here. Right, let's just see. Right, so all I'm waiting for is a reaction of this gap here. Okay, so I'm gonna wait for the action of this gap and see how things goes, right? Okay, there we go. We got it now, right? We see how we tapped into it. Okay, so I'm gonna go on to my lower time frames, my 1-hour time frame. Where is my, say my 1 minute time? Okay, let's just mark out our 15 minutes also, 15-minute time frame as well. So we can look at possible TPs, right, or whatever we might react from. So I'll just mark out this gap here. This is my 15-minute as well. So this could be targets that we could be looking at, right? Possible target also is of course this gap right below here, but you'll see how the market reacts right here. This was probably like an NFP. No, this wasn't. This is crazy. It's actually crazy. I don't know what happened there. Probably FOMC or something happened there. Right, so what I'm waiting for now, okay, I'm gonna go my 1 minute time frame. I'm gonna wait for market to break below here, right? Okay, I'm gonna wait for market to break below. Okay, it's taking forever. Let's go on to. Okay, so in this case here, if we continue to break above these highs, or might even shift bias, when do you mark out the 4-hour gaps from what time? It doesn't matter what time. You can mark out the 4-hour gaps, all that you see that in the chart you see, you can mark them out, right? So I'm just gonna wait and see. We could see it looks like we might even be pushing up, but let's just wait and see. Okay, oh shit, what the flip was this? 9:30. Yo, what the hell happened there? Wait. Thanks, bud. Okay. Okay, wait. I see now what happened, right? And you see how we rejected, like I said, how we're gonna react off that 15-minute gap, right? Okay, this would have been I don't think this would have been a good trade to take here because your entry probably would have to be somewhere there, but I wouldn't want to take an entry there. But let's just see how you if they actually traded this, right? So you got that gap right there. All I'm gonna wait for, of course, is market to respect it, right? So you can see basically, yeah, I gave a few scalps, I guess. Like you could have taken a few scalps. That's maybe if you took a few scalps from here, that's roughly, I mean, that's about it's about 50 pips only. Damn. That's actually crazy. Like that's actually crazy. It's only 50 pips. From here to here, it's only 50 pips. That's crazy. Okay, so if you took a sell there, probably from here to here, once you saw the action there, that would have been 50 pips there, right? Okay, okay, so if you look at another trade here, right? If you look, yeah, we tapped into this 4-hour gap again, right? So where I would look to take a trade probably now if I broke below somewhere below here or something. If you broke right about below here, right below this previous low right here, so I will look at maybe a trade. Could take a sell there. So I'm not gonna take any trade here. Yeah. Okay, so we did break above here finally, right? So I'll go back up to maybe my 4-hour gap here and see if there's any targets we could probably look at here. Any 4-hour gaps here. There's my 1 4-hour fair value gap here. And I think this is filled, right? Okay, that's just been respected, right? So I'll just mark this out, right, like this. And I'm gonna make this blue. Okay, so we broke above here, right? All I'm gonna do is I'm gonna go into a low time frame, right? And I'm gonna look for a fair value gap that I could have entered off from, right? So we got our break of structure, right? We can see how would you take scalping trades. Okay, so if you look on this, okay, like I showed you guys, where was it? Yeah, right. If you took scalping trades, you would have been of this fair value gap right here, right? When you see reactions of the fair value gap here, once you see a rejection right there, you've taken a trade there, right? You've taken a small trade. But this is for some, I think this is the before price went all crazy. So price moved to like quite a, looks like a big move here, but only moved like 50 pips here. So that's like more like a scalp, right? So if you see like reactions right here, you've taken this entry from here of this inverse fair value gap here, scalp right there, taking a sell till there, till that fair value gap or whatever, right? But let's just look at this example here, okay? So this could be a possible place where we could be looking for entries. I'm gonna look on a 15-minute time frame again. So anything here that I could target? Okay, nothing. Let's go back onto here. There's nothing there. I'm gonna look here. I'm gonna mark out this. Let's mark out these fair value gaps here. These are unfilled 1-minute gaps, right? So possibly I'll be looking for entry because you see this got disrespected. Okay, this fair value gap here, this one here, I'm not going to be really looking at that because it got disrespected. We closed below it, right? So all I'm going to wait for is, of course, some sort of reaction to this fair value gap here. Okay, so if we didn't react, then wait, what did we? Okay, so it's okay. We did get a bit of reaction there. I see now, right? So your entry would have been something like this, right? You see how we reacted straight up from here. We respected that gap there. Okay, this fair value gap, like I said, it got disrespected, so I'm not gonna really look at it. But this one here, you would have taken your entry right here. Once you got a candle closure right here, you've taken a trade. Stop loss maybe below here. TP, you could maybe even target these highs here. Alright, let's just see how this goes. Okay, TP got hit there. If you want to hold longer, I mean, you could hold. Let's see if this actually plays out. That could possibly be a target there, but let's just see how that plays out, right? I don't think it'll hold. The market didn't have this much power before. Okay, so the market didn't hold through there. So your target would have been just that high, right? This would have been your target there, but that's not even that much. Okay. Okay, so let's just look at it again, right? So if you can see, right, we close above here. Okay, this is a 4-hour gap once again. And now we created this inverse fair value gap here. Let's make this yellow. Let's make that yellow. Right. Now all I'm waiting for is market to close above it. That didn't close. There we go. There's your entry there. Right here, targets can be these highs right here. And what the reason for us entering here is because we reacted off the 1-hour 4-hour fair value gap, right? This inverse fair value gap right here, we actually acted off it. Now all I'm waiting for is I'm taking buys from there. Let's see how that goes. Okay, and then we hit full TP. Okay, simple. If you took one trade here, 2 trades here, you'll be profitable right already for the day. If you did, this is like Tuesday, Thursday, 12th of June. If you did take these 2 trades, you'll be in the blues. Maybe if you want to hold longer, maybe you could even target those highs. Let's see if those are highs played out. The target, let me just mark out. Let's say this highs play out here. So I guess that could have been a target there, but let's see. Okay, they smashed that basically. So if we held the trade from here till there, maybe that's about 88 to 79. This is actually crazy. Like I actually forgot like how it was slow. Like if you compare the way the gold moves now to what it was there, this year is only 100 pips. This is only 100 pips, guys. So 88 to 79, 110 pips. And this might seem like a scalp here, but it's crazy. Right. Okay. If there's a huge FVG and price test back, does it matter how much the FVG is tapped into? No, it doesn't really matter. As long as it respects it at the end of the day, that's fine, right? So you see, this was a IFVG. We tapped into it, right? This was this 4 hour FVG. This is a 4 hour IFVG, right? If you look on the 4 hour time frame, you'll see that we basically disrespect. Wait, where was it? Yeah, was it this year? I can't remember. Oh yes, yes, it was this year. Okay, I just drew it a bit wrong there, or something like that, right? So this was a 4 hour FVG right there. I mean, basically we tapped into it, we disrespected it, right? There's a fair value gap there. It doesn't matter. And if you look at these ones here, right? Okay, these ones that respected it there in this case, right? We respected it and we dropped, and then of course we ended up pushing up higher from there. It reacted off this 15-minute gap here, and we continue to go higher, right? But it doesn't really matter like how much it taps into it. It's still gonna be valid, even if it wicks it all the way out. Like say for example, it wicks it like this, like absolutely crazy wick, okay, and it still closes like inside the fair value gap. The candle closes inside. That's still valid, right? It's still pretty much valid. Okay, so I'm gonna take. Let's go back onto my. Let's just go ahead. Let's fast forward a bit, right? Okay, so here's another fair value gap here, right? That 4 hour fair value gap. I want to just see how we act off it. Okay, so we close above it. Okay, let me just go back here. I think I went too much forward. Okay, so we close above it there, right? As you can see, we close above it. I'm just gonna go onto my lower time frame. I don't think we did go any much higher than that before at that time. I think that was all-time highs at that point there. So we're playing with all-time highs right now. Yeah, that was the highest there at that point, right? So okay, so we disrespected this fair value gap there. Let's just go back onto my 5 minute. Hi, it will be recorded. Yes, it will be recorded. Yes, everything is gonna be on the YouTube page. Let's just go to my 1 minute time frame. Right. So this is now an IFVG, of course. So we can wait for market to basically tap back into it, right? Just wait for market to drop here. Oh, if you wanted to as well, okay. If you missed this initial move right here, you could have entered again for buyers somewhere like here. Looking here, there's a fair value gap here. You could have waited for market to basically, because you see, right, we got the breaker structure, right? Once we broke above this here, remember I showed you guys, you can see clearly market's creating higher highs and higher lows, right? So all you gotta do is wait for market to uh break and create a new high as we did right there, and just wait for market to tap into it like we did over there, and you could take in a high trade till there, right? But I'm just looking for now, we're looking for the action of this gap here. So if you did take a buy, it would have been something like that, right? Of this fair value gap here, once we got an action there, a TP, I don't know where you're gonna put your TP actually. You can say maybe these, I don't know where. Okay, I guess something like that. I guess maybe like 50 pips or so we can target, I guess. Right, but that's basically, you can see we had a break of structure here. Then of course we wait for a retracement into the gap, and then you can take a new trade there. Right. Okay, so I'm just gonna wait for a tap into it. Okay, there we go. A tap into it. All I'm waiting for, of course, is a market mass inverse of fair value gap like that. Right, let's just see. There isn't anything here, so we just wait. Okay, there's my trade there. My trade is right here. Once we close, okay, once this candle here closes, let me just go back here. Okay, so the candle close here, you can see. Okay, stop loss maybe just below this wick here. I'll go and TP, I guess, and go for a 1-to-1 or something. Okay, maybe that's a bit too big, maybe something like here or something. Or something there, I guess. Maybe just below that fair value gap there. Right, so you can maybe target these highs even. Okay, so we got roughly on this move here, you got about 70 pips. Okay, so if you targeted those highs, even if you targeted these highs here, this you target, obviously you can target that all high there, but if you just want to be safe, just target the nearest high, right? Stop loss just below that fair value gap. That's what I did there. Okay, we tapped here again. Let's see how this goes. Okay, so it looks like we might be dropping lower. So now, if I want to look for buys again, what I'm gonna wait for? Okay, I'll wait for market to tap, maybe break this high here. Okay, as you can see, we did create a bit of a bit of consolidation here. So I'll wait for safest is if we break above here, and we close. Okay, I'll look for buys here. If you don't do that, we don't do anything, right? Okay, just consolidating here. Okay, nothing really happening there. And in fact, actually, we're respecting it. This 1 minute gap here. Yeah, nothing's really happening. Yeah. Okay, let's go to like January or something. No, not January, like February or something, because this is it's up moving so nicely. Let's go to okay, let's go November. I think November was pretty decent. Let's go to like 13th or something. So I'm gonna go my 4-hour gap here, get 4-hour fair value gap. I'm gonna look for my 4-hour fair value gap on the 4-hour time frame. I mark them out right there. My unfilled gaps, right? Remember, we're filling unfilled gaps, we're looking for them. Okay, so I mark up my 4-hour fair value gaps like that, right? These are my unfilled gaps, okay? So I've marked out them out here. I've got the 4-hour gap here, so all I'm gonna wait for now is just see how we react, okay? Okay, so we got a reaction right there. Wait, let's go on to our low time frame now. So you see how we respected it there, right? We respected this 4-hour fair value gap right there. And now we can go on to the lower time frame, so we can look for entries, right? So now what I'm gonna look for, okay, and perfect, we actually even closed above this gap here. So okay, so we can take a trade like something like that. Wait. Okay, so we take our entry off this IFVG right there. And what I'm gonna wait for is candle closure. Okay, that's right. Okay, that's something what I want to look for. That's okay. The reason why I didn't take a trade here, firstly, we have like a small body here. You want to see at least like a 50, like the candle size needs to be at least, like 50%. So if this candle closes like this, it shows me that there's like there isn't much strength right now in buyers, right? So I'm not gonna really take a trade there. And also you can see we had like a bit of a roadblock, yes, like consolidation right happened right there. So I'm not really trying to take a trade from there. But okay, let's see again. Okay, so here's actually this candle here is something I would have probably taken a trade here. Right here. So that's a decent trade there. I'll take my stop loss maybe just below there. TP, I guess we can target these highs here or something. Alright, let's just see how this goes. Okay, this one didn't go as planned, right? The market's basically just trying to break above, but it's like struggling. Okay, eventually it does end up buying up. So let's delete here. So again, where I would have probably looked for a trade is probably out of waiting for market to inverse here. And I've taken a trade. I might even got stopped out there again. But eventually you would have taken that trade there. If realistically, if I had to take this trade probably, then I probably might have gotten stopped out there. Or if I put it, wait, let me just see something now. So probably if I did take a trade, it would have been something like that. Okay, no, actually I wouldn't have taken this trade. Reason being is it's right by the highs, right? So if you look here, we struggle to break, currently struggling to break it. So I probably would have waited. I wouldn't have taken this trade here. Okay, so once I obviously we break here this high, then I might have looked for like maybe like a continuation trade. Okay, but let's just see now if we come back. So a continuation trade basically out of enter of another fair value gap here, like a wait for market to respect fair value gaps, right? So okay, so if you look here, or even inverse this gap, so you're taking a trade something like that or something, I guess. But let's just see. Okay, that didn't hold as well. It reacted off this initial fair value gap there. Okay, was a bit of a reaction there. Now it's giving a reaction of this fair value gap here. And of course, your targets can possibly be there. Does it actually go there? Okay, it doesn't end up going there at all. Go on my 5 minute weekly. Okay, eventually it does go there, right? Does go there. Okay, so I would have taken a trade probably if I missed this. If market obviously just pushes up like this, right? Where was this? Right, if I looked here, possibly, yeah, so probably if I did take a trade, I mean, if I did take a trade here or something like that, of this IFVG that was created, of this fair value, the IFVG fair value gap that was created right here. So we created, I'll probably have taken a trade there. Or if I missed this trade here, it would have probably been of this fair value gap here once we get the reaction there, and then that would be my trade there. Okay, and then we see now currently what happened was we tapped into this fair value gap, right? And as you can see, we didn't really like respect it. Okay, we just continued to go into it, and so let's just see how this plays out. Currently, we're in the fair value gap, so there's no really any trades that I'm gonna be looking at to take. I'm gonna wait for a breakout of this fair value gap. Okay, we got a breakout, but it didn't leave any fair value gap to us to enter off, right? Okay, here we got a breakout here. We broke below there. So I'm looking here and I see, okay, I see how we react of this fair value gap here, right? You can see we tapped into it and we respectively dropped down. So let's just see how this plays out. Okay, that didn't really play out as too well. That just continued to fly and fly and fly. Okay, market's struggling to break this low. Okay, they finally something happened there. Broke below here. Okay, so there we go. We can see something happened here, right? If you enter here, you've taken your entry off this fair value gap here, right? Once we broke below here, retrace into the gap there, and your entry would have been off this closure of this candle right here. So your short position, something like that, I guess, and then your TP just stop loss there. TP, how many? Well, you can go for like a 1 to 1.5, or like even a 1 to 1 is fine. 1 to 1.5 or something there. So that would have been your TP, right? So okay, so if you have a breakout of a fair value gap, right, you can use either the 1 minute time frame or your 5 minute time frame, right? Okay, so you can use either one of these time frames to get your entries. It's completely up to you. Both the time frames work for me, but if you want probably like more accuracy, I guess it's probably the 5 minute time frame. You won't be getting like catching on to absolute nonsense like that, right? You will get much more better trades, right? Now, what must your leverage be for trades like that? Your leverage can be is 1:2000. That's fine. That's completely fine. Okay, let's look at another date somewhere. Let's look at like March or something. Okay, I just want to see something quickly. Okay, so this I'm gonna go over. This is March, right? We're looking at March. Looking at the 4 hour time frames. I'm just gonna mark them out for me. Just delete everything else we don't need. Okay, March here. This is last week of March. So I'm just gonna mark out all of these right here. Okay. Just mark them all out. Unfilled, of course. Just want to see something here. This was also a 4-hour fair value gap, which we just reacted off from. As you can see there, we reacted off this 4-hour gap here. Just seeing here, got other gaps like that. Okay, this got filled. Okay, that got filled there. You're just looking for unfilled gaps, right? This didn't get filled as well, so I can mark them out here. Or did it get filled with that spike up? Okay, I think it just about made it, right? So we survived this fair value gap here, survived, I guess. Didn't get filled, it just basically got weaked, right? So what I'll be looking for is I'm gonna look here, right? I'm gonna look for replay again here, sorry. So if you look here, right, once we react of this fair value gap here, I'm gonna go into a lower time frame and I'll just wait for market to sort of push up, right? So I'm gonna wait for market to completely inverse this, break out of this gap, right? Which time frame prefer for New York session? So I don't just use one time frame, I use multiple time frames to get my entries. But I look mainly at the 1 hour time frame. I use the 4 hour time frame, and I also use like the 1 minute and as well as the 5 minute, right? So we're gonna look at using the 5 minute here. Let's just look here, right? So possibly, right, when you see we broke out here, okay, I'm on the lower time frame, and we still basically respected that fair value gap on the 4 hour, right? So where my entry would have been once we got the rejection right there would have been something like that, right? Now taking a trade, long position there. Stop loss maybe just below your TP, you can target these highs here. Just maybe just below here, right? So okay, let's just go for a 1-to-1, I guess. Yo, okay, that basically nearly got stopped out there, but eventually it shot up there. I don't know what happened there. Well, this was probably might have been one of Trump's tweets or something like that. But eventually TP got hit, I guess. Was very close to getting stopped out. And then see there what happened. Okay, so let's just carry on, right? Let's carry on looking for examples for trades. So I'm gonna look now. This is my next area that I'm looking at, right? This is my next zone that I'll be looking for sells or even buys, continuation buys, right? Or what I'll also be looking for is, of course, if we come back here. Okay, so we're not gonna take any trades in this area. What I'm waiting for. Okay, one is two. Of course, if you full margin, you can blow your account. If you full margin your trade, you can blow your account easy. But this okay, but this is actually this was a massive stop loss right there, man. Okay, but the markets are moving crazy, right? This was moving crazy. So don't. This is just for examples, right? But if you full margin, I guess you probably will gonna blow your account very quickly. Yeah, but yeah. Okay, but let's just kind of. This was in the market was moving crazy, so don't worry too much about it. Market has calmed down a bit, but yeah, let's just carry on. I'm gonna wait for market to either come to one of these fair value gaps here. Let's go on the 15-minute time frame to speed it up a bit. Right, so I'm waiting. Okay, we just about missed that gap. Okay, did I actually draw it properly? We'll just see if I drew it 100%. I might have drawn it and we did tap into it. Yeah, I realized that. Okay, so you see we tapped into it there, right? We did tap into it, I just didn't draw it 100%. Okay, so you see, right, we tapped into it here. Okay, now where I'm gonna take an entry from is just simple. This is actually a very easy trade. If I go back onto my 1 minute or even my 5 minute time frame, all I'm entering off is from a fair value gap, inverse fair value gap, right? So if I look here, okay, there we didn't really tap into it, or did we? Okay, we tapped into it there. Take a trade here, right here, candle closure, of course. And your TP, short position right here. TP maybe just go there, some just below, just above there, I guess. Or if you stopped it, you probably got stopped out there. But if your target would have been maybe just below, I'll put a target somewhere here or something. Is it easy to flip? Is it easy to flip $100 account? I wouldn't say it's easy, but like a $50 account. I wouldn't say it's easy, but it's not. I mean, you can, but it's not something that you can do like every time, like, you know. So if you took even off in the 1 minute time frame, let's just see here. So if you took a trade on the 1 minute time frame, entry would have been probably been a bit higher even. Yes. Entry would have been there. Entry would have actually been worse. Right, but all you're basically doing is you're waiting for a reaction of this gap here. Oh shit, right, so even if you got stopped out here, if I did get stopped out, I put my stop loss here, right? Re-entry would have been, right? It would have been something like that. Entry would have been there. Put your TP, sorry, nice. FVG right here is marked out here. IFVG entry, there we go. TP can be just above these peaks here. And there's your trade there. You're probably recovered if you hit that stop loss, right? So there is going to be losses, right? There is going to be losses here and there, but that's basically how trading is, right? And you probably would have recovered easily, very much easily, right? It's like a whole 500 pips. So, TP this, okay? Okay, let's look again, right? Let's just wait for market to react of this gap here, right? So just see how this thing goes, right? Okay, close there. So let's see here, 4 hour. Is there any other? Okay, there we have a 4 hour gap right here. I didn't even see this, right? So let's just go back here. Okay, so we created a 4 hour gap with that, right? So I see now how we reacted off this gap here. Okay, so all I'm gonna do is I'm gonna wait for the action of this gap again. Yeah, I'll take. Sorry, okay. Wait. Okay, so my entry would have been something somewhere there, right, of that IFVG, but we have a lot of noise here, so I'll be just careful. So I would rather wait for market to completely break this high here first, right? You see how we're actually rejecting right here. So I think it will be suicide if you were to decide to enter something here. Probably my entry here would be fine, but like I think this would be suicide if you were to enter like without waiting for a break of structure. Okay, do we break it? Yeah, we just about broke it there. Okay, so we broke structure right there, and we reacted nicely off this 4 hour gap. So all I'm waiting for is, of course, a fair value gap that I can take an entry off, right? So here we go. There's a fair value gap there, and all I'm gonna do now is I'm gonna wait for a reaction there, right? Does it give me a reaction? Okay, this didn't give me a reaction. Okay, that's not a good fair value gap to take a trade off. If you did take it, I would have probably taken off this IFVG right here. See, we got a IFVG right there, waiting for market to close above it right there. Okay, that's not a very good close here. This one have been a very tricky trade. And I have no idea where these random buys are. Like 1322 on a Wednesday, we have a spike, a whole 100 pip spike out of nowhere. Like that's 100 and then it pushes up again. So these Trump random spikes out of nowhere is crazy. It's absolutely crazy, right? Okay, here again, we broke up again. We broke above again. All I'm gonna do is I'll wait for some sort of reaction there, closure above something like there. So trade could be taken here, and we can just see how this plays out. Okay, market just consolidating right now. It's not really doing anything. It's just playing between the fair value gap and this red line that we drew here. So there's like there's no real like movement or anything. We could take some skulls, I guess. It could have probably taken a entry of that IFVG there and taken TP somewhere there. I don't know. A lot of scalps you'll be taking. Look at this consolidation, right? It's actually just moving sideways. There isn't really any trades here. Like you gotta wait. If it's kind of giving us like false moves here. So here again, it could have given you a scalp, I guess. After IFEG, once it breaks above there. But yeah, yo, what is that? 8 o'clock, just a random spike. And then we continue to dump down there. Okay, we're still playing around here. There's absolutely nothing here. Right, so I'm gonna go home and find another day. Just see, leave. Sorry, wait, why did I leave? Let's go to, okay, let's go to Monday. Tuesday, no, Monday I got cooked there, no. Let's go to Thursday where it was moving a bit nicely there. Or even like yesterday, right? Let's go on to yesterday. Right. Yesterday we're gonna look at this is yes Thursday, right? I'm gonna mark up my 4 hour as well as my 1 hour gaps, right? Okay, my 4 hour unfold. I'm looking here, we go here. Okay, and I see another one here. Yeah, Monday sometimes it's like you get cooked. Okay, nothing else unfold. I'm gonna look at my 4 hour now quickly. Okay, 4 hour we have the small gap here. Monday is the best for you. Yeah, Monday this past week was a bit up down. Even though every single day I was profitable, but I did take losses in during the day. Like I did take a loss Monday morning, Tuesday morning, Wednesday morning. I took a loss. 3 days in a row I did take losses, right? But the trades afterwards were all profitable. I didn't make money from the trades afterwards. That's what basically helped me. So I guess. And we have these gaps here. This was crazy. This was when Trump was going to speak. I mean, Trump spoke or something like that, and then just spiked up, and oh, that's crazy. Right, so I've got my 1 hour gaps. I'm just make a 1 hour gaps different color here. Just make this is a 4 hour gap, right? So where I'll be looking to take trades probably, even if I look to here. So all I'm gonna wait for is some sort of reaction of either side or either of my fair value gaps, right? So if I've got here a 1 hour gap here. All I'm gonna do we actually even get an action? Let me just go back here quickly. Just gonna see where this came. Yeah, okay, we got a reaction right there. Right, so you see how we reacted right there, right? So where I'll take a trade trade is simply I'll take a trade here. All I'll do is take a trade here. Right, simple. We broke above there. What happened? Friday is crap. Yeah, Friday is okay. Sometimes it moves. The New York sessions are normally crazy, right? Okay, but anyways, yeah, we see we got a reaction right there, right? All I'm waiting for IFVG right there. Wait for breakout. Your breakout happens right there. Okay, yeah, okay, do we breakout here? This I'm not really too happy with this breakout. I would rather wait for something like that. I'll take a trade here. And of course stop loss can be there. TP you can go for 1 to 1 or even target these highs here. Oh my days, that was a crazy. That's actually crazy. We had a market open. So that's a market open right there. Just absolutely smashed that TP, I guess. I didn't realize that. Okay, but let's look for another example, right? So wait for the action back into it. Okay, so we got the action there. We got the action right here. All I'll wait for, of course, I'll just wait for IFVG here. I'll wait for candle closure above here, then we can see how this goes. We didn't really get anything there. Okay, this is crazy. Yes, what the hell? What are these moves? Okay, I'm gonna go back onto because I see it's a new day here. See if there's anything else that I can mark out here. Okay, just get on and see. Okay, this 1 hour completely respects it there. I had a bit of a messy price action right here. And this is about 154. Right, so I wouldn't take a trade like anywhere here. Like I would rather wait for a clear breakout of this area right here. Okay, I want to see a breakout somewhere here. Otherwise, I'll probably look for sells or something. But just see. You gotta be kidding me. You gotta be actually kidding me. What the hell? 2 o'clock in the morning, just out of nowhere. That's obviously only the Tokyo session open. Okay, but let's just see how this goes, right? So I guess that's probably okay. All these 1 hours are yeah. Okay, so you got the 1 hour of this now became obviously an IFVG. Just see how this reacts here. Still nothing. There's no trade that I'll take actually. Okay, so yeah, probably I might have taken something here. Once it broke up above these highs here. Like I said, I would wait for something here, but here it just broke out and it just dumped all the way down. So, but I'm not gonna take a trade somewhere straight out of this breakout. I'll look for some sort of fair value gap to take a trade, continuation trade up. Right, so I'm looking. This is yeah, this plays out here. Wait, why daily? Wait. Okay, we still technically I see. Okay, we're still respecting this gap. Yeah, that gap is still fine. Okay, so we can still take our trade rate there, right? I thought that 2 o'clock made that an IFVG, right? So I'll just wait for tap here. Okay, yeah, we got a tap here again. Okay. Where I'll take a trade, I'll just wait for, of course, an IFVG and I'll take a trade. What up? Oh. Let's just see if we get that. Okay, so that I think that got disrespected now. Yeah, again, we respected it, yeah. So you can take a trade off this IFVG, yeah. Guess. Oh yes, I think I did give you guys a trade somewhere. Where was it? At 4 + 4. What time was it? Let me just check my phone here. What time I gave you all that trade? I gave you all the trade somewhere there. Where was this? Phone is frozen. 4 6. I told you, or 4 7 30. I can't remember where it was exactly. Oh yeah, stop loss was just below this fair value gap. Yeah, but I think I gave you a trade somewhere here or something. Can't remember what it is. Yeah, I gave you a trade somewhere here. What time was this? 4:15. No. Oh yes, I gave you a trade from here. What was the action there? I think it was after 15 minutes of that. I clearly, I think I gave you a trade from. Oh yes, I think I saw when I saw we closed above here. I thought we might react from here, continue to buy up there, but I was a bit wrong there. No. I'm saying. I can't actually remember what it was here. But then I remember this area here. That was like my last hope here. This last position here, I think, yeah. Then I ended up adding another position here, somewhere here, and then I ended up buying all the way up there. Then I closed it. I think ended up getting the second position, got up break even. Where it was here, something. I think it dropped, continued to drop, and it took me up break even. I went up quite high in the first, and then it dropped all the way down somewhere there, by like 9 o'clock or so. Let's fast forward a bit. I not 1 hour, wait. 15 minutes. Yeah, it did drop. It dropped somewhere from 8 o'clock or so, and then it reversed and it took me out there. But the second position also got out afterwards as well. But yeah, guys, I think I gave you guys some quite a bit of example here. Basically, you just all it's the strategy is simple. You're just looking for how would you tell if it would rather continue from FVG instead of pullback. Okay, so how I would look for if it's a continuation. Okay, firstly, if you look here, right, you look something if you the act of this fair value gap here, right? Okay, so if it's a continuation, basically, if this is a normal, this is, let's say for example, this is a bullish fair value gap, right? Okay, that's a bullish fair value gap there, a bullish fair value gap, and basically all I'm looking for is if market continues to push up here, right? And it's basically it inverses the gap. No, wait. So this is a bearish fair value gap. Okay, so market pushes up and then continues up higher, right? So where I will look for if it's continuation is if we have a break of structure. Okay, so we have the market push up till here, retraces a bit, and then we continue to break up here. So I showed you guys, like in this trade scenario, where was it? Yeah, I said I wouldn't take a trade unless of course, we push up to break above this here. Okay, well, unless we break above the previous highs, then I will look for buys, right? Because you can see we came to this point here, we dropped, we came to here, we dropped, we came here, we dropped. Okay, yeah, we pushed up a little bit higher and then we dropped, right? So I need to see, of course, I need to see some sort of break of structure occur. Okay, so again, if it's gonna be maybe market just drops, let's see for another example. Again, yeah. Salam Salih, how's it? Okay, so yeah, again, I wouldn't just take a buy straight up from here. Okay, I want to see some sort of break of structure occur because you can see we're struggling to break up here. So wait for market to create a high or something like that, and then we can take off the retracement. So yeah, again, if you saw, you don't take. Obviously, this is a crazy candle. Yeah, this is probably a news candle. Yeah, that was yesterday news. So yeah, I'll take a trade somewhere here or something. If I go on my 1 minute time frame. So I'll just wait for market to inverse this gap here or something like that, and then I'll buy from there. But yeah, you just got to look at where market's reacting from, right? So if market obviously continues to break highs and highs, then you can obviously wait for retracement into a fair value gap. If it doesn't retrace, let's say for example, okay, you want to take a buys, right? You wouldn't just try and buy anyway, right? You got to wait for some sort of retracement. Then okay, so you see for example here, okay, here if you didn't take a trade here, right? Where you will take a trade off is sort of a retracement somewhere. Okay, so if I'm looking, okay, here there isn't anything here. Okay, yeah, again, there's a retracement here. Market open later. Now I'm not gonna be trading, I'm gonna be sleeping, bro. I'll maybe wake up in the morning or something like that afterwards. I'll trade. That's it. I wouldn't take a trade anyway. Yeah, is where I'll actually look for a trade. I'll take a buy maybe when we close nicely like there or something, and I'll take a buy maybe targeting this whole block right here. Or yeah, I wouldn't take a trade, yeah. But so you gotta obviously if you miss the move, you gotta wait for the retracement into a fair value gap and see how the market respects it. Right. So a lot of people ask me which fair value gap do you target? You just gotta see which one the market respects. Okay. If the market respects this fair value gap here and it respects it nicely like there, then that's fine. You can take a trade there. But if the market doesn't respect it and it continues to break down below, then you don't take a trade. Right? You take a trade, you look for the next fair value gap, right? So I get this question a lot. So just try and remember this, right? Look for which fair value gap the market respects. Okay. And another thing that can also help you guys know which fair value gap is also you might want to take say something called a premium and discount zones, right? So if market's probably in a premium if the market is in a premium, try and obviously if you're looking for sales, you're going to take market in the you're going to take sells in the premium and you're going to take buys in the discount zone, right? So to mark this out, you can use something called a GAN box, right? You can just take a, you can just mark out from there to the other way around, sorry. Right, so obviously, okay, you might want to look for trade somewhere below here, okay? So this buy here, maybe you could have waited for market to come into. Okay, I'm gonna come back to your questions now. The yellow box, what numbers are those between? This is 4748 and 4745. Okay, hi, please advise me. So let's say you see a good fair value on 30 minutes or 50, but on 50 minutes you see consolidation at that point. If you see wait, if you only see if on 30 minutes, but on 50 minutes you only see consolidation at that point, does that mean price will come back to consolidation point as well? I'm a bit lost what you're saying here. Okay, good. So if you see a good fair value gap on the 30 minute, right? Okay, there is a good. Let's look for a fair value gap here. Right. Okay, so I got a fair value gap here marked out here. And if you say, so you're basically saying if market's consolidating here, so okay, so basically all I'm gonna look for is of course like I'm gonna wait for retracement into the fair value gap, right? So I'll be waiting for some sort of retracement. Let's see if I do get a retracement. Doesn't look like I do get a retracement. Talking about the same FVG but on the same different time frame. Okay, so you're talking about which okay, so you're looking at the 15 minutes of the okay, so you look at 30-minute fair value gap here, right? Okay, so then you see you're talking if you see consolidation, right? So all it's gonna be, of course, you're gonna look at your low time frames and you see the market basically create some sort of structure from that rejection, right? So if I mark out that 15-minute there, right? Where is it? The 30 minutes, sorry. But what I want to see is some sort of structure form, right? Okay, so yeah, we can see okay, market did form a bit of a slight bit of structure here, but then it reversed from there and it just continued to push up higher. Then we look for a fair value gap that market does respect in the end. Okay, so here's a 30-minute time frame. Right, okay, here's a fair value gap here, right? I'm gonna mark out this one here. Okay, so you're just gonna look for market to basically respect that fair value gap. Okay, so I'll go on to my. Let me just draw a line here so I know exactly where it is. Okay, so yeah, okay, we got the fair value gap there. All I'm gonna wait for, of course, is market to tap into it, and basically we can take a buy from there. Right, so or if I'm gonna look for sales, I'll look for, and obviously, okay, sorry, actually, I'm not gonna take a buy straight away from here, right? What I'll do is, of course, you wait for spell structure to form and enter of an IFVG. So your entry will only be taking place here. That's where actually your entry will take place. So you take a buy there, like that, and then the stop loss can be maybe below here, or even below this fair value gap, and you can go for like a 1-to-1. So if it's consolidating, you're just gonna wait for market to either give you two things. Either we basically break down below here and then we basically retrace here and we continue to fall, or market will can even just basically just tap here or something like this. Okay, market can do something like this, tap into it like that, come back and then we go back up here, or you can just go just straight up here, whatever. Market could even do something like this, right? Basically, right? You can even do that. Okay, so basically, I hope that kind of answered your question, right? So all you gotta wait for is some sort of structure to form, and then you take your trade from there. So yeah, you can wait for that you can wait for basically a pattern to form, right? You basically wait for like a V shape, right? Something like this. Um, Basically like a V shape, and then you take your entry of the IFVG that was formed of here. Right here, you see there's a V shape here, right? And there we go, take a trade, and then the entry of the gap there. So if I go here, this is what we're looking at, okay? Right, there's a V shape, okay? It's an upside down U, or sorry, not upside down, just it's basically a U shape. And of course, if it's you're looking for sales, it's the other way around, okay? And then yeah, you just take a trade and see how it goes, and there we go. That hit full TP. Okay. Hope you guys understand what's happening. But yeah, I think we'll end the meeting here. If anyone has any questions now, please let me know. Then I can help you guys. Any other questions, guys? Please let me know. Any other questions, guys? Any other questions, guys? Can you spot? Can you spot or have an idea where liquidity will be set? Okay, so where I look for liquidity, right? It's either it's I'm either looking at highs or lows of the day, right? For me personally, I'm looking at fair value gaps where market could possibly tap into. That will probably be where we could probably possibly go, right? Or I'm looking at my sessions, right? The session I did show you guys the settings for the sessions right here. So you can see, okay, this is your low Asia lows, right? You can wait for Asia lows to get taken out of. There's your Asia highs right there. You can mark out these zones, right? It'll help you to trade better, right? So you can wait for market to sweep these lows like there. See, you sweep the lows there, and basically you end up pushing up a bit. Let me just go on 1 minute time frame quickly. Right. Yeah, again, these so use your session highs, session lows, your 4 hour highs, your 4 hour lows, right? Your It's also your 1 hour highs. You can also use them as well as your 1 hour lows, right? So there's liquidity. Okay, just close this now. Okay, so there is liquidity above these highs and above these lows here. So sorry, below this here, there's liquidity. Above here, there's liquidity, right? So you can mark out these zones here, right? You can mark out these lows here. These are all liquidity, right? So market will obviously sweep one of these areas, and then you could even push up here or something, right? All this is liquidity, right? Your lows, all right here. That's all liquidity that market will sweep eventually, right? So that's basically how you will spot your liquidity. Okay, so where I also look for reversals. Okay, like I said, my reversal trades, that is where I look at my higher time frames. My higher time frames basically will give me basically tell me exactly where market could possibly reverse from. Market could possibly reverse from here if I look at this 4 hour gap here. Basically, we tapped into this gap here and then we pushed up there. This was so this became an IFVG, right? We tapped into IFVG and we pushed up. Okay, let's look for possible reversal points. Okay, here again, right? You can mark out your 4 hour gaps here. even there, right? All your 4-hour gaps, that basically will tell me where market will reverse, and see how that's how we reverse from there. So trust me, the 4-hour gaps and the 1-hour gaps, it helps a lot, right? So this you probably, if you use your 4-hour and your 1-hour gaps, you can basically tell yourself, you kind of know exactly where the market might reverse from, right? Because you know where to mark out your 4 hours and your 1-hour gaps, right? You just mark out your gaps and you will see exactly how the market reacts, right? But if anyone has any questions, please, you gotta let me know. Okay, do you use dollar index? No, I don't use a dollar index. I don't really use a dollar index. Okay, any questions, guys? Anyone? No questions, guys? No questions, guys. Okay, so if no one has any questions, then we'll end the live here. Okay, next week we'll have again, obviously. Okay, DXY. Yeah, you meant DXY. I don't really trade like supply and demand. I mainly trade off fair value gaps. That's my whole basically my model is basically based on trading of fair value gaps, where the action zones and stuff like that of fair value gaps. Not really a supply and demand trader. Okay. Yeah, I don't really look at the DXY. I personally I don't really look at DXY. Yeah, I don't really look at it sometimes. FVG to next high low. What you mean? Okay, so basically what I'm saying is that I use fair value gaps basically to tell me where I could possibly buy or sell. So yeah, I'll probably might look for sales. I might place sell limit somewhere here, and I'll look for trades there. Or if I'm looking for buys, I might place buys here again. I'll place limits here or something like that of these zones. Okay, yeah, probably got stopped out there if you place a limit there. But basically, that's how I'm looking at trades. And then how I also trade is I wait for breakouts. Of course, I wait for a breakout, and then I look for trades out there as well. So if market breaks out of this high here, and then I can look for buys along that route there. Okay, that's basically how I trade. I don't really trade supply and demand. Maybe I'll use like some sort of support and resistance now and then, and also like a trend line, basically just like confirm if market wants to move, continues to be bullish or bearish. Oh yeah. Thank you, brother, for the lessons. No stress, bro. Next week, same time, guys. Okay. Oh yeah, sorry. Tomorrow, hopefully, we can do lives. We can do a live tomorrow. Then yeah, guys, a live tomorrow should be good. We'll trade Nasdaq live at 3:30. Nasdaq, I showed you guys a strategy. It's simple it's also simple as well. Nasdaq will trade live. I've got my funded account. Obviously, I'm trading. My funded account tells me where's my funded account here. Trading market open now. Market trade market open. So I trade off a password. Okay. Yeah, go live. What is your three favorite indicators? My three favorite indicators. Yeah, I've got your. Okay, I can't really say these are my favorite indicators. The only indicator that technically that I use, and I only use it for really Nasdaq is of course this indicator. This year, this is the one indicator someone gave it to me. I don't know. Someone gave me this indicator. They actually I was supposed to actually like promote them, but the indicator is absolutely horrible. Like honestly, it's actually horrible. This indicator. I after I saw like how shit it is, I didn't bother promoting them. Like it's honestly it's horrible. Like I'm going here. Like I mean, their stop loss gets hit there. Take a long there. Stop loss gets. Or you probably put your stop loss at break even, I guess. But it's a shit indicator, right? I mean, it's pretty shit. Like, yeah, a short position. Yeah, I mean, like, what the hell? Like, it just basically gives you trades out of nowhere. Like, honestly, it's giving you some cock trades. So that's why I didn't bother promoting this shit. Like, it's actually absolute dog shit. And then, of course, I have this indicator here, which I also don't use this indicator much, but give some decent trades. You can take a trade there. Yeah, I mean, like, it's okay. I don't really use indicators much, but I just have it on my thing, yeah. But yeah, go live. Yeah, I'm gonna do go live maybe at maybe like 1 o'clock or so. But okay, I got this one account here, as you can see, 289. I need, I think, 1,000. I think I'm gonna try and aim for. Technically, to get a payout, I need to get at least like I need to trade 150. Yeah, it's dog shit. It's actually dog shit. That's why I'll never use that indicator. I'm not gonna. They do say that you can change, like if you wanna be like conservative. Let's just check how it's I'm very conservative. Yeah, speculation BTC. I don't trade BTC USD. Raiz trades BTC. I don't trade that shit. Spreads are horrible. The trading conditions is against you. Like why would you wanna trade BTC USD when you have shit spreads? Like it's just I'm not gonna waste my time. Okay, yeah, they gave. Let's see how this trade went here. Okay, yeah, this is an okay trade, I guess. You took a trade here. And they're charging quite a bit for this indicator, so and obviously I would have gotten commission from this indicator, I guess. For if I had to promote this indicator to you guys, I would have gotten commission for it. But it's actual shit, so I'm not gonna bother giving you guys something cocked like that and lie to you guys that this thing is like the best indicator in the world. Meanwhile, it's absolute dog shit. Yeah. Yeah, again, okay, give a short there and then just went up. Just yeah, I guess a short here. What the hell? Gave a short and just pushed up from there. Short entry, short entry. Okay, that sell was okay. Yeah, gave a sell, yeah, a sell there. No thanks. Oh, it has a win rate here. I'm looking here. There's a win rate. Okay. Okay, it is profitable, but I mean 46% win rate. It's not like guys. But if you apply risk management throughout the whole thing, you will be profitable because I see there the data is there, but I will personally will never use this indicator. Sorry, regarding RSI and MM, no, I don't use all of that. I don't use that. Is gold and Nasdaq your go-to for trading? That's correct. I use gold and Nasdaq is. I'm actually enjoying trading Nasdaq these last few days. I mean, I've been enjoying Nasdaq. I can't lie. Nasdaq's been quite good. Friday, lucky we didn't trade Friday. By the way, Friday was terrible, guys. Friday. If I took Friday's trade, I would have definitely lost. I've taken because look at this like this consolidation here. If I did take Friday, let me just see if I did trade Friday, by the way. That's why I didn't do the live with you guys, because also we had CPI, so I kind of knew this thing was going to be dog shit, this market. Okay, maybe I would have taken a win, but a small, very small win. If I did take this trade, okay, we'll just see. Mark on my 1 hour gaps here. If I did trade Friday, yeah, also we were in that gap there, so I wouldn't probably, I'll probably be looking for current cook there, I guess. Let's just see how this thing plays out, right? Okay, so we know for New York session, I wait for that first 10 minutes to form, but they were probably, this was our data highs, that's our work. So targets, obviously, when you have news events, your targets should be, I guess, these highs here you could target. So that would be my target there, my TP, I guess. So entry, I will guess I don't even take an entry here. Probably got cooked there, I guess. Yeah. Yeah, I would have gotten cooked. You would have gotten absolutely cooked if I did take that trade, but lucky. But eventually it should take out that CPI high. Does it, take it out? No, okay, there we go. Okay, yeah, actually, so when you have these highs, like when the market creates, when it has this news events, right, you can actually take reversal trades, because that now becomes like a liquidity point, right? So you can take a reversal trade right here, simple, and you'll smash it all the way down. Take it, TP can even be these New York session lows right here. Absolutely smash it. 9:30 lows. So this is also very high. This 9:30 a.m. This this 15:30, 9:30 New York time. This is also a very high liquidity zone. So this you can also use for targets, right? That can be your targets for trades. But guys, I think I'm gonna end the meeting here. I think, yeah. So we'll have live trading tomorrow. We'll have trading gold as well as Nasdaq in the afternoon. But yeah, I'll see you guys. Salams. Enjoy evening. Enjoy the rest of your week.